Hey there, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. It's Friday, the 17th of July, 2026. And look, I can't resist a good, ships pun. Investors abandon sinking chips, and if you think that one's bad, if this sell-off continues, I've got a few more up my sleeve as well. It was not a good night for, the chip stocks generally. And we've got, TSMC came out with earnings yesterday. Bottom line is they absolutely smashed it out of the park. And I think we had, I'm just trying to grab my notes here. Where are we? Sorry. Q2 profit was up 77% to 22 billion, beat on every line. But then they raised capex, and the stock fell 2.3%. And look, overall, most of the analysts that have looked at it, and everything I've seen and everything I've read, essentially, that was the most bulletproof earnings I've ever seen in my life. And realistically, obviously the market's just, the market's obviously priced in quite a lot of froth, and obviously, as I said, these capex numbers, and I've been repeating this for the last 2 or 3 weeks. You could tell on the price action last earnings when they beat on top and bottom line, the hyperscalers, that any increase in capex was punished. And, I think that pattern is sort of playing out here a little bit. I do agree with the CEO. Conviction in multi-year AI megatrend remains very high. I mean, if you just looked at the numbers in isolation, you would absolutely think that was the case. Netflix as well didn't help the cause, but that was after the bell, down about 9 or 10%. Revenue was still up. Operating margin dropped a little bit, and they slightly. And you got to remember, people in the US, the system is designed for them to beat on top and bottom lines. 80% plus of companies do it every single earnings. So to beat by 13% and an EPS on 1 cent, and have those sorts of numbers with the multiples that the whole market's trading at the moment. It is not good enough. And they're actually starting to reduce their transparency, Netflix as well. And they're not releasing all sorts of numbers that they used to release. And that's, reducing transparency is never a great sign. And I think the market was expecting, given they've had quite a decent string of sort of blockbusters recently, that number would have been better. So, look, they're still making money. It's not a disaster. But they are sort of getting to that point now where the amount of users they've got, and they've stopped publishing certain elements of the users, is that the growth is not necessarily there anymore, and they're a little bit more like a maturing company, which means that there's going to have to be some PE adjustment for investors. So look, I mean, there's where the chip stocks were hit. The hyperscalers did rally a little bit there. And the healthcare sector really did save it, but it was the chips that just dragged it down. The Nasdaq was down like 1.5%. And we're down about 0.5% for the week. It dragged the S&P down there. United Health was up 1.2, beat on every single metric, and Abbott Labs was the top S&P gainer as well. And basically, as you can sort of see here, Micron down 8, AMD down 3, Intel down 4, these were pretty big falls overall. And I think that the index did pretty well to survive as much as it did. I think there's money flooded back into those hyperscalers, but I got to say that's not going to be great overall. Now, sorry, Nasdaq was down 1.47 and down 1.5 for the week. Nikkei dropped away as well. We've got gold, silver, copper, all largely down. But basically, there was some comments from the Fed overnight. The Dallas's Fed Logan said he currently believes modestly higher interest rates would balance the outlook. He said that the path is tenuous to soft CPI, more a hope than a likelihood, and that inflation is the biggest worry given the risk of further acceleration. That was Kansas City Fed's Schmidt. And we had retail sales up 0.2 overnight, and core retail sales up 0.5 as well. So, which wasn't a big, wasn't massively watched. And obviously, crude's still down a little bit, but there was some developments overnight in that as well. Fifth consecutive night of strikes in Iran. Trump said he will continue to strike until he says he's had enough. The oil infrastructure will be saved for last. And then the Houthis deployed missiles and drones near Bab el-Mandeb, which is the strait, which is down from or south of the Suez Canal, which blocks where the Saudis have got that pipeline, which they've diverted most of it. The Iranians have also retaliated with missile and drone strikes at US military targets in the region. And Iran has told the Houthis to stand ready to close the Red Sea if US hits their power infrastructure. So, look, this thing's escalating. And the fact that oil's down 1% is absolutely absurd. And it's probably one of the better buying opportunities, I think, at the moment. Those US reserves are down to 40-year lows. Traffic is not going through Hormuz, and if they shut that, if they shut the other strait, which I'm struggling to pronounce, this thing's in real trouble. And then we've got higher rates. There's nothing that'll save it, particularly at these valuations at the moment. It was an interesting comment from an analyst on Bloomberg this morning, basically saying that they toured around Middle America, following some of the political parties, and essentially no one's talking about the war. They're complaining about gas prices, but they think Middle America thinks it's over, and that's the way the media portrays it. Even Bloomberg, which should be better, is very much portraying this war as absolutely done. And it barely gets a mention. I don't actually recall this morning them mentioning Iran strikes outside of a slight update. It would have been less than 0.5% of the 2 hours I sort of listened to the radio. Next week we got Alphabet and we got Tesla, and that's on Tuesday. And Tuesday and Wednesday. So that sort of really does kick off. That really does kick off some of the larger companies. You've also got Eli Lilly, which has been on fire. Freeport-McMoRan, which is copper company, has been on fire. Be interested to see how RTX Corp goes. They're in the military sort of defense sector as well. GE Vernova will be interesting as well. That's that bottleneck of power there at the moment. I think Intuitive Surgical actually reported and dropped about 8 to 10% overnight. So I don't think that one's necessarily correct. And then you've got Blackstone, which has got a fair bit of private credit and things in it, but I think is starting to stem the bleeding a little bit there, as well as IBM. Earnings does start to really heat up next week. We've also got employment here. We've got some PMI stuff as well, and then but not much in the way of major releases next week. And now we go into the 2-week blackout into the Fed, so there'll be nothing really mentioned from the Fed, I wouldn't imagine, overall. So we get a fairly busy week, and you probably want to keep an eye on that hyperscaler. Google had announced a delay to their new Pro version or their Enterprise version, and that cost them about 4% overnight. And I think I may have got the I may have got the heat map wrong at the start there, because it wasn't. It actually wasn't up as much as that area wasn't. Well, I think that could have been the weekly that I put in there. But you'll have to go to trading.com and check that out yourself. Apologies for that. I made a small mistake there, because Google was down about 4%. So, and maybe I've saved you some stress. But podcast this afternoon will be out around about 6 o'clock. Myself, Finn Judell, who's back from swimming with the whales, and literally. And Kai Chen will be talking. Is it time to abandon chip? Yet again, couldn't resist the pun. And we'll just go through. We'll just sort of go through the things around demand, what to do if these hyperscalers capex is taken very, very badly, and what the long-term prospects are for these things, so you can kind of make your own decisions around whether you should be, if you've got them, whether you should be buying them, or if you don't have them, whether you should be buying the dip if it falls. So it should be an interesting little episode. And for those of you who Ausbiz watchers, and if you're not, go to ausbiz.com.au. Kai Chen was on the US version of the call yesterday. It was absolutely on fire when it came to all those chip stocks that were mentioned. Very much worth a look in terms of, I think they covered ASML and Micron and all sorts of things with Mark Moreland and Andrew Gorgian. So, so he'll bring some expertise today. The man knows his stuff. So scan the QR code there, or get it on your favorite platform. We've got about a week to go before you're going to get your bids in for buy the dip. If you're holding any S&P, or FANG index kind of ETFs, this is very much worth a look. It's open to retail, it's open to wholesale, obviously, as well. And it might be a pretty good time. This market's looking a touch shaky, and there is quite a few things in the in the pipeline that could derail this. This is a S&P 500 index investment. It's just done via structured investments. You allocate less than a fifth of the capital you would normally allocate to get the same exposure. And you get to enjoy all the upside, and then obviously that excess cash that you've got left over from selling your ETFs, you can you can buy the dip in the individual stocks if you want, or you can do some income or whatever. So go to mpcinvest.co/buy the dip, or just go to our homepage, or scan the QR code. It's a really good investment. It's super popular with our clients, and it's very popular with new and incoming clients. It's a 3-year, but it's a 3-year, and then in the first 4 months up until November, you get your entry price set. In a feature called the Look Back. And I think we nominate a day of the week, and whatever the lowest closing settlement is between now and November will be your entry price for the rest of the 3-year term. So you don't have to stress out about when you should buy and blah, 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 blah. It's a good way to get that, optimize your entry and be really capital efficient with your investments, and then get that get that excess capital to go to work with in something else. But look, people, if I don't catch you on the podcast this afternoon, we will speak again on Monday. And there is a fair bit of corporate news out for the Aussie. Just very quickly, Zip's exiting New Zealand to focus on Australia and the US. Regis Resources had an update, and BHP's got issues with strikes. Coles walked away from a $4 billion Greencross acquisition with TPG Capital. The SPY was only down 15 points, which is fair enough. But, I would highly recommend going and checking. There's a fair bit of corporate news there today that could be affecting your stocks. Go and have a quick check. And yeah, we will speak. Have a great weekend. We'll speak again on Monday.